Good morning, everyone, and welcome to the European crossover webinar. I started putting on the, well, this time I have the webinar also running on, on a MacBook. That way we won't have these issues again with the audio. Actually, I saw it this morning and it looked like it was on the computer audio as opposed to the Yeti mic. But I'm making sure, so I'm starting the webinar just a little bit. Hit the start button a little bit early, make sure that there's no audio issues or something's on the wrong thing, and go back to listening to it at the same time I'm broadcasting. That way, if something pops up, we're already aware of it, or I am. But anyway, thanks for joining us here on the European crossover webinar. We are seeing the euro move higher. We did the analysis and the Asian analysis. I don't think that's any surprise that we were looking for the euro to start to move higher. Really more, as I mentioned before in the past, as a default to the dollar starting to go in and work lower. We'll go over some of the Asian analysis. I didn't do anything on the cable because, like I said, I think the cable in some ways is going to resolve itself to the downside, but I just don't have a good take on the cable other than say the obvious levels. And you're looking at them right there, which is just below this 28 area here, actually maybe a little bit higher, like that 28.17 or so. And then right here, the 26.94. Remember, we've actually been putting that around 82 or so. So I think at one point we had a 26.69. We'll have to actually have to pull up the bias chart for that. We'll get to that, and then we'll cover the news and also the Asian analysis. And that's from this weekend, well, not this weekend, but from Friday from the NFP. We'll go and move this all the way for now. And this move up close to the 1448. I think we actually did go with the 58 here, but we'll go in and take a look at that. So be just one moment. There we go. Quite a bit of data, for today so far between European and UK data coming into the States. So we have Canadian housing and building permits, and let's take a look here. That's going to be here for us in the States. This never moves anything, this employment trend, but the Canadian housing starts. That'll be at 8:15 Eastern, so rather early. And we did see quite a pushback here in the dollar CAD also. Actually, I posted in the room I was buying as we made it down there into the 32.50s. Actually, I was even trying to buy right at 54, but I thought we might dip just below there. And you know what? It didn't hang around. I mean, it didn't really take off. Now, if you look at it here, it looks like it really took off from that low here, but it was really very, very, very slow. And I just don't like ever holding positions over the weekend. So I took my few little pips out of that trade, but we did see a pretty good move back up here late in the day. But if you look at it here on a daily, and before we just jump into the news, obviously you've been talking about that 33.43 right here. But if you look at it here on a weekly, it's still holding up well. Look at this previous week's body. So, we're still holding up well, even though we had dipped, we closed out. So we're still doing okay on the weekly. Although, like I said, that was a heck of a reversal. And I think that this is certainly setting up for all kinds of short positions to be taken on when you look at the daily. But you can certainly see that momentum on a weekly still pushing higher. But come back, but we'd have to get above any moves to the 33.43 good sales. It would have to actually get a daily close above that to get that going the other way. Not going the other way, but to short-term nullify that. But actually, in our Asia analysis, we're looking for moves all the way up to 33.55. So with that, we'll go on and move into the news. And we also, on Friday, we were talking in the chat room about 1254 being that next target. And that's exactly where they went to on the close on Friday. And then we've since pushed up a little bit higher. But let's go on and move into the news. So it says the Australian and New Zealand dollars get a break as bears feed on the dollar. And the Australian and New Zealand dollars recoup some losses on their U.S. counterpart on Monday as speculation the Federal Reserve might be done raking hikes undermined the currency's yield advantage. And that's what we've been talking about actually for well over a week, almost coming into a week and a half or so, as it will start to see this, the whole reason with the whole U.S. story was because of these unbelievable yields, and it was basically leading other countries where they're actually still doing their own, what do you want to call it, the QE or reducing their QE or whatever, but they certainly went on the same path as Fed. Well, now we've seen a complete opposite move. You've seen here, right here is look at this. We're still continuing to mount higher. Look at this. So, that's going to have to be factored in. And so we would expect the dollars to start to slide back. But anyway, going forward, the Aussie hit a 4-week trough at 71.70 at the opening after disappointing Chinese trade data over the weekend showed import growth slowed sharply. That only fueled concerns about the Sino-U.S. trade dispute and the latest twist was Hawaii. Yet, the Aussie edged up back to 72.18. As the session wore on, the U.S. dollar came under broad pressure as investors scaled back expectations on rate hikes following Friday's softer reading on November payrolls. Markets have gone from pricing in 3 rate rises next year to less than 1, while 10-year yields have dived 40 basis points in just a month. The dollar is under the shadow of any resolution to the ongoing trade dispute, increasingly dovish Fed language, and slowing global growth to set of factors that has created a wall of worry offshore, said Kiwi Bank chief economist Jared Kerr. The New Zealand dollar likewise pared its losses to stand at 68.86, having been done as far as 68.41 on at one stage. Both the Aussie and Kiwi fared worse against the safe haven Aussie yen, having taken a beating last week as global equities cratered. Local bond markets again tracked the rallying treasuries. Yields on Australian 10-year debt fell to their lowest level in June at 2.43, a world away from the November peak of 2.83. New Zealand yields dropped to their lowest since October of 2016. Investors are beginning to toy with the chance of a cut in domestic interest rates next year, given an economic growth had missed forecast in the third quarter. However, the Reserve Bank of Australia Assistant Governor Christopher Kent on Monday reiterated that the next move in rates was likely to be up and played down the significance of one quarter's data. His positive spin was backed by data showing home loans jumped a surprisingly strong 2.2% in October, the biggest increase since July of last year. And on to sterling. Sterling nears a 3-month low as investors prepare for a Brexit vote. And you can see we're continuing to move here lower. We had, at one point, we had notched out. I think this may have been, I don't know if it was maybe it might have been the FOMC, but I think we had it as low as 26.69. I have to take a look what we had it for the NFP, but I don't think we had it that low, but we'll see here. We had 26.80. Okay. So that whole area, there's going to be some support, which takes out those stops. And I think we'll probably see at least a little bit more short covering. You can see here, it looks like we just took out that low here. Right there, we sure did. Right there, 26.59. So we got as low as looks like 26.57. Probably a little bit of short covering from here, I would expect. Sterling sank to a near 3-month low against the euro on Monday as investors positioned for a parliamentary vote on Britain's Brexit deal with the European Union that Prime Minister Theresa May is widely expected to lose, easing some concern about Britain crashing out of the bloc in March without a deal. The EU's top court ruled on Monday that the British government may unilaterally reverse its decision to leave. Traders are trying to predict how the pound, among the worst performing major currencies in 2018, would react if May loses a vote, and scenarios include a no-deal Brexit, a negotiated deal, and a second referendum. The currency traded flat against the dollar and was down 0.3 against the euro at 89.88 pence, its lowest since September 24th. Well, now we know we do have new lows right here. Okay, and the likely loss of the vote, accompanied by the growing risk of a leadership challenge to May, should be negative for the pound and send the euro pound above 90 this week, said Chris Turner, head of currency strategist at ING. Analysts are focusing on the number of votes May could win or lose by and what that could mean for her chances of renegotiating a deal with the European Union. A narrow defeat for May, say by around 20 to 50 votes, is seen by investors as the most likely outcome and has the potential to cause short-term volatility for the pound. Reuters poll predicted 2.75% fall in the currency should the vote fail to pass. Now I saw where I think it was Nitish had one where if they don't hold the vote, they're thinking maybe they may get a 200 pip rally. I don't remember which was the news source on that, but I saw his. An emphatic defeat for May by a margin of around 100 votes would leave her withdrawal agreement in tatters and propel sterling into the unknown. Such a conclusive thumbs down could convince markets that Britain is heading towards a no-deal Brexit and push the currency below 120, said Oliver Brennan, a strategist at TS Lombard. We have to be prepared for the fact that FX markets' initial reaction that is taken mechanically after the vote is first counted might not be the correct one, and afterwards there'll be some strong moves in both directions, said Ulrich Luckman, FX strategist at Commerce. Yeah, it's quite the unknown. I didn't even do any analysis, Asian analysis on the cable. As I've said, I just don't have a good feel where the thing's going. It certainly feels like it wants to go lower. And we've even talked about that going down to eventually, I think it was 2 weeks ago, we said it could go down to 25.50. It was actually 25.64 as a level. But you can see, we said, okay, you might see a little bit of short covering. We moved up to, what was it, about 70, 73. And now here we are making new lows again. It's just a toughie to trade, because if you get underwater, it's almost like you feel like you have to jump out. But let's go on and move on. Dollar little change after the biggest weekly loss in 3 months. The dollar consolidated losses on Monday after posting its biggest weekly drop in more than 3 months last week, as weak U.S. data undercut expectations of more interest rate increases in the world's biggest economy. Widening interest rate differentials between the U.S. and the rest of the world, driven by a confident U.S. Federal Reserve, has fueled an unlikely dollar rally this year. But weak data in recent weeks has clouded the currency's prospects for next year. U.S. non-farm payrolls increased by 155,000 jobs last month, below a median forecast of 200,000, and the wage increase was weaker than expected, even though its annual rise remained near the highest levels in almost a decade. Apart from the weak data, some Fed policymakers have struck a cautious tone about the economic outlook, possibly flagging a turning point in its monetary policy and lowering the expectations of U.S. rate hikes priced into money markets. Futures markets are now pricing in only a 44% chance of an increase, compared with nearly 80% last Monday. Fed fund expectations are dropping like a stone, and that's a big obstacle for the dollar. Though there's plenty of event risk out there this week, there'll be plenty of that for dollar bears, said Ulrich Luckman. Against a basket of currencies, the dollar was flat after falling 0.8. The euro led gains at almost 1/3% at 14.70, though market traders said the currencies markets will be in a wait and watch mode. French President Emmanuel Macron will address the country at 2000 Paris time on Monday as he seeks a yellow vest anti-government protesters that have wreaked havoc in Paris during the weekend. In London, Theresa May faces an internal revolt against a Brexit deal before a vote in Parliament on Tuesday. May plans to push ahead with the vote, but senior lawmakers in her own party put pressure on her to go back to Brussels and seek a better offer. A rejection could throw plans for Britain's Brexit into turmoil and leave her political future hanging in the balance. And Eurozone investor morale slumps to a 4-year low. Investor morale in the Eurozone slumped to a 4-year low in December as fears about trade conflicts, Italy's budget row with the European Union, and Brexit led to a collapse in sentiment, a survey showed on Monday. Centix Research Group said its investors' sentiment index for the Eurozone slid to 0.3 from 8.8 in November, the lowest level since 2014 December. A sub-index on current conditions fell to 20 from 29.3 in November. Looking at the international environment, there's practically no glimmer of hope for the Centix managing director Manfred Hübner said. While the ECB is preparing for the end of the billion-dollar government bond purchase, the economy is slimming down at a considerable pace, again challenging politicians and central banks. Whether trade disputes, the Italian crisis, unrest in France and Belgium, or Brexit is coming from all corners at the moment, he added. A separate index of investor morale in Germany fell to 7.2 from 15.6 and what Hübner described as a breathtaking loss of momentum. And in regards to the U.S. recession, could take longer than usually thought after key points of the Treasury yield curve invert. As a surge in U.S. Short-dated debt issuance has altered the dynamics of the Treasury market. Another indication showing an economic downturn is farther off. As the Trump administration ramps up debt sales to cover a budget deficit projected to hit $1 trillion next year, it has crowded the front of the yield curve with far more new bonds than the back end. Banks, meanwhile, have shown a preference for mortgage-backed bonds over Treasuries since the financial crisis, a shift that has elevated the significance of moves in the yield curve of those bonds. These structural changes in supply and demand have some analysts thinking that means a longer lag until the recession following inversion of the yields on the 2 and the 10-year. Some analysts and economists say the other yield curves may be better predictors of impending economic downturn. The spread between the 2 and the 10-year has shrank to less than 10 basis points. Analysts say that the central bank's quantitative easing program since the financial crisis have distorted the yield curve. The current curve is massively distorted by QE and the effects of the unwind. Given the banks are using less than the Fannie and Freddie, the importance of the Treasury curve has really diminished in the last 9.5 years. The gap between the 2 and 10-year is currently at 24 basis points and 44 basis points respectively, making any future inversion likely to come later than that of the Treasury curve. The spread is also currently around 50 basis points, including an inversion that would occur later than most commonly cited 2-year, 10-year spreads. It could be many months before we see that point of the curve inverts, said Charlie Ripley. And lastly, we'll finish up with gold. Gold steadies near a 5-month peak on the subdued dollar. Gold prices were steady on Monday, having touched a fresh 5-month peak early in the session as the dollar weakened after a soft U.S. jobs report. Weak data points from the United States have been putting pressure on the dollar index, which has proven to be positive for gold, said A.J. Kedia. The dollar slid against the euro and the yen after data showed U.S. non-farm payrolls increased by 155,000 jobs. Gold tends to gain while rate expectations recede because lower rates reduce the opportunity cost of holding the non-yielding bullion. There's also some safe haven demand coming back to gold, said Argonaut Security. A number of tailwinds are in place for it to move significantly higher during the months before falling U.S. interest rates, a declining or at least a stalling dollar, wobbly U.S. markets. Over the course of December, we see prices trading between $12.30 and $12.85. And we'll go on and move into the analysis. Be just one moment. So it says the year is built. Let's see. Your daily is built a foundation over the last week from 1320 to 1400. A daily close above 1404 has the opportunity to push this to 1521. 2-hour resistance comes in at 1458 with support at 1354. A 2-hour break below the 1320 would nullify the upside potential, thus opening door for initial target of 1267. So we have looking here, when we look here at the daily, and like I said, I'm not a fan of the trend lines, but when I see where the market trying to make a turn, you like to see whether you're going to get a little bit of a follow through. We're trying to make that, but you can see here on the daily, it's pretty cute. This 1454 right there. If they can get above this, that's really going to go on and get us to really jump further. But like I said, this 1404, if we can get a daily close above that, that's going to, let me see, right here, we comes in here, right there. 1403. So called 1404, we can really start to move higher. But right now, with the risk of the Brexit whole thing and uncertainty of how the market's going to react to a situation like that, it's probably going to keep the market a bit in tow until then. But certainly, I think the euro is in a situation or position to try and make a move. So for now, we'll have our daily resistance at 1404. And not so much a resistance as it is, if we can get a close above that, that'll certainly get the market to get a tilt to the upside. But like I said, even that tilt may be a little bit slow in coming with the risk of the uncertainty of Brexit. When we look back here for support right now is going to come in right here at 1355, right there. Here's a key daily area here for this, right in here, this 54 area here for the daily. But here on the 2-hour chart, I still like this. You know what? I think we could easily pop to this 1448. Actually, I'm surprised that it didn't work. Actually, you know what? It came pretty close right here, 1444. We almost made it, but it's going to come in right there, 1458. So that's if we were to make that pop, which you've already made that pop this morning. Don't necessarily see it coming back, but that's where the resistance would come in, 1458, and we had that from Friday. And we stopped short at 1444. 1404 is going to be key. If we can get a daily close, that's going to open, essentially what it's going to do is going to open up the momentum to start to go on and push even further higher. Although, once again, you saw that Centix index come in rather weak. They mentioned about the German comparable data, being I think the guy said breathtakingly, loss of momentum. And certainly those things are going to weigh on the euro, but I think the euro has the opportunity to move higher, basically on default. And we've talked about that. It comprises 56% of the cash dollar index. So if we were to see that if we were to see that dip, as the dollar starts to lose that momentum, I don't think that the euro has any choice but to move higher. Although it might be the old 3 steps forward, 1 step back. But I think we could start to push higher. But I think we may see some pretty big ranges. The dollar bulls may not be ready to go on and give up, and I think that's where you could see the dollar make another push higher, not next to new highs, but another push higher before maybe that might come as the risk of Brexit that may have its own weight and push the dollar a little bit higher. But I think that would be a selling opportunity. So let's go and move into cable. Now, we had talked about, I think we've been as low as 26.69 on our support, but you can see here we even broke below. Finally, we've been talking about this going to 26.64 back in here and right in here, and it kept holding above. We've taken out those lows here. Look here. Right there, you see 26.59, and now we've since dropped down here 26.50, and you're kind of backing and forth and right here with the cable. For right now, that'll be support as we start to try and, you can see the close, and that's trying to work a little bit higher, get much below that, and that's going to trigger it. So for right now, I'm not certainly wouldn't suggest buying this thing. I'm talking about those looking to cover their own shorts ahead of this vote, because I think you'll probably see a lot of movement ahead of that. But for right now, it'd be 26.56. Although, like I said, the next area of support comes in at 25.64, and certainly you could maybe hit that. You go on and hit some stops and really get some momentum going. But for right now, for today, where we stand right now, and I think people may be trying to even up some positions, your risk level right now would be 26.56, or any moves down there. I think they're going to try and defend them at this point. And let's see. On the upside, hard to believe that this coming. That's still about to get 50 pips away. So it'll be right there, 27.26. Let's go and move into the Aussie dollar. Well, this 71.86, this level's been holding up like a champ. It really has. Obviously, it stands out. It seems more pronounced when you look at it on the 2-hour, but you can see it's held up like a rock. And that's going to be the support for right now, 71.86. I don't see anything significant on the daily on the upside unless you get past the 72. It looks like probably about 72.62 or so, but we'll move right into the 2-hour chart. That 71.80 that we had certainly has, look on the gap, look at that did that support that we had from Friday, which was a 71.80. We've been as low as 71. Well, that wasn't bad. We missed it by 2 pips. Resistance is going to be right there, 72. You see this coming across here, right there, 72.75, 72.75 for resistance, and we had it right there too. That was also key daily right there. This held up really well. We had 68.34 as our support from Friday. And the low was, well, coming into this day, 68.40. So it's not bad. Really just testing and just getting below this zone that we have in place. We'll go with the zone, which is the 68.45 for support. Pretty good reaction here off of that lower part of the zone here, which you can clearly see it now on the 2-hour chart. Support would come in right there at 68.60, 68.60. On the this is on the daily, but on the 2-hour chart, let's. Until things kind of get shaken out a bit. That's going to be a resistance for right now, 69.18. Right there. Which is what we had from Friday. And we saw quite the reaction from the dollar CAD on Friday. Boy, did we see a huge move off of this. It's a little bit somewhat softer U.S. data than what was expected, and just a phenomenal Canadian jobs number, which reacted. You saw just a huge move. We ended up making it down here, this 32.54. I would have gone and decided to just hang on to that position had it not been a Friday. It was just, there's no way I wanted to hang on into a Friday, and I'm kind of disappointed. And obviously when we started to work hard, but I'll tell you what, it was slow coming about. When I picked it up down here and thought, you know what, I'm not going to hold this because I don't know how, it's also looking at the way we had reacted. There might be other people that might have to just be forced to bail out. And then next thing you know, I'm, find myself underwater by, 50, 60 pips on a Friday, and I don't want to do that. So I ended up getting out with just a very small gain, but boy, we saw a pretty good reaction back on this going into all the way late, all the way almost into the close. Almost made all the way back to that key 33.43 that we've talked about on the daily. Here a moment. So it says appears stage an impressive late session rally, but still below the key daily 33.43. Short positions are in favor with the 2-hour resistance coming in at 32.55. Only a daily close above 33.43 invalidates. Initial support is 32.76 followed by 32.02. So let's go and take a look here on the daily. So there's that key 33.43, and this had really opened it up, when we got that close just above that on Thursday, and opened the door for them to even get above the 34. We were even talking about 34.12, and then we, eventually moved up even higher, all the way up here. What was it, 34.45? I think Blake had one heck of a short from there. So this is is your line of demarcation, 33.43 on here. You wouldn't want it to close above that. That basically would negate it, but doesn't necessarily, I mean, for those who want to insist on still holding, but you definitely don't want this to close back above 33.43. You can see here support would come in on a daily at 31.98, but we talked about 32.02 in the this over here. So here's 33.55. That's going to be our resistance here, 33.55 on the 2-hour chart. Starting with crude, continue to remain in the doldrums here. That's going to continue to weigh on the Canadian currency. Seen a smart little rally up in here. I have that. And we have our support coming in right there at 32.76. I think we had mentioned here on the analysis here. 32.76. So initial support is 32.76 followed by 32.02, because I think once we can get past there, we can look and talk about this 32.54, but a breakdown here is going to really open the door for them to move down here, which is the bottom of that zone. So any moves to 33.55, well, we're still a ways down here, but the key is you don't want a daily close above 33.43. And initially, there's that support there, right there. You see that? 32.76 coming across here. But once we can break that, I think we would head right down here for 32.02. I think once again, like I said, this looks like great opportunity for shorts, with the U.S. interest rates maybe starting to slow down. The perception, only flying the ointment is obviously the crude oil. But once again, I think that probably a lot of late bulls might have found themselves trapped and looking for any opportunities to exit, and a lot of shorts probably willing to go in and step in here. So once again, it's going to be 32.76 for the initial support, with a potential down here for starters at 32.02. And let's go on with the dollar Swissy. Now this is continuing to weaken further. Once again, I don't consider it to be the canary in the coal mine for the dollar that it used to be, although it's just kind of leaning that way. But you can see here, had a nice little gravestone doji here on the daily, which would have been probably Tuesday. So it certainly looks like it's open to move lower. Support's going to come in right here at this 98.57 here on the daily. We'll take a look where we stand here on the 2-hour chart. just past the 38%, and we've still, we got a little bit of a push, not much. There's potential then. If they don't get a good reaction from 38%, then you're generally going to move back lower, and then there's your 50% at 98, 36, pretty good little fall then. We'll go right there with 98.52. 98.52 for support. Resistance on the upside is right there, 99.27. Right there, give me a better idea. And you can see some pretty good volume coming in down there. So 99.27, we'll call it 99.28. And the dollar CAD still, you'd have to give it the benefit of the doubt that it's still bullish. In a longer term, yes, but I'm saying even on a shorter term, we're probably gonna have to get a couple of days before we can say, okay, now we flip it to range. So we still got to give it the benefit of the doubt, especially after it broke out, on Thursday. But that makes it more, suspect after that reaction we saw on Friday. But got to give it the benefit of the doubt. Let's move in here to the dollar yen. So it says with declining U.S. interest rates, the dollar yen is losing its upside momentum. Selling opportunities on the 2-hour coming at 1308. Remember that 1308? That was so huge from 2 weeks ago. I think it was 2 weeks ago, with a target of 1186. A 2-hour close above 1369 negates the trade outlook. We'll move on to the dollar yen. Key on the daily, even for right now, on the short-term basis, be 1321. But 1308 is the one area, remember, just after Thanksgiving, that once we were able to get a 2-hour close above that opened up the door for us to challenge 14, and certainly we did. We made that run up in here. So you can see the importance of 1308 here. You can even make the case here, and that's on a daily, the importance of this 1320-ish area, but 1308, any scabs up here, or where people are going to be happy to go on and step in and take the other side, especially with declining U.S. interest rates. We had it at 09 because it was 1308 and a half, if you remember, but we'll go with the 1308. Found some support from down here, but on a very short-term basis, it's going to be right there, 1208. 1208, right here. But as I said, we're looking for a move down here to 1186. You can see right there. But like I said, if we take a quick stab down here, 1208, maybe another bounce back up before we come down to 1186. It's got a short-term basis, 1208. And moving on to the cash dollar index, the weekly has closed below the 96.89, striking a cautionary signal to ardent bulls. A daily closing chart level, the 97.14, still remains formidable. The index has held remarkably well in light of U.S. rates rapidly declining. It'll take a big range day to knock the bulls' confidence. The 2-hour chart is trading in a 100-pip range of 96.33 to 97.31. 2-hour resistance comes in at 97.06 for selling opportunities, with 2 consecutive closing bars above 97.31 to negate that outlook. 2-hour close below 96.33, targets 95.73. So let's take a look at this cash dollar index. You can see right there, this 96.89, right there, 96.89. You can see it coming right across. So we've lost that. When you look at this, we opened up, had kept that momentum going, and then we saw this basically almost engulf the thing, then come back up, move higher. And here we are, and we're still hanging on. That's what I keep pointing out, is that the bulls, they still have the overall momentum going in their favor, even though things look very on a daily basis and shorter time frame certainly look ominous. But right here, when you look here at 96.89, closing below that area is bearish now. So it's, like I said, strikes a cautionary tone. You can see there's meets up with this close here. Essentially may be up 1 or 2 pips. And also right here where the market opened up, and now here we are, we close below it here on this weekly bar. So any moves towards that is going to, like I said, has a market worried then at that point. 96.89, could be 90.91, but you can see that. Now we're still a little ways away, good 30 pips. We'll go and move this now to the daily. I would expect this market probably continue a bit of a bid as we go into Brexit because of the risk there. So I don't see where people are going to be trying to sell it ahead of that. And hence, that's why I come up with this 97.06. We might see some fireworks and really any moves to 97.06. And I think we would need 2 closes above the 97.31 to negate that, because we might see some pretty good fireworks as we come into tomorrow. So let's go on and take a look now on the 2-hour chart. Now, here's that big old range that we're looking at. Now, we've had 96.84 as a real key area, almost as a bias pivot, but this market is traded on both sides of 96.84. We'll probably even see a little bit of resistance come in that place. And like I told you, I'm not a great fan of trend lines, but I do like to post them if I think I'm at a key, like a key turning point. Same thing, i.e. the euro was trying to break higher. And you can see here with the cash dollar index that we've broken below this, we got back above it, but did we make new highs? No. So you wouldn't move the trend line down to here. And the market, like I said, we're back and forth in it, but I think that any moves down here, as we mentioned here, going into tomorrow, probably see a lot of fireworks. 2-hour resistance comes in at 97.06 for selling opportunities, with 2 consecutive closing bars above 97.31 to negate. So let's go back. See right there? There's 97.06. Now you can make the case that, well, if I sell against here, 96.84, hasn't that been a huge area? Yes, it has. How about 96.95 or 90? Yes. But here's, if you're trying to play it patient as we go into Brexit and the uncertainty, and that might cause quite a bid into the dollar index, also because it's not going to be good news for the euro either, then you could look here at 97.06, and it would take 2 consecutive 2-hour closes above 97.31. Here's that range I'm talking about. It sounds kind of crazy, but it is trading in a 100 pip range. When you look at it, you think, you know what, they have spent a lot of time just back and forth. They haven't really broken one way to the upside, although they've gotten above it, nor to the downside. And I think when I mentioned about a big range day, that's what I was talking about. We may go into Brexit, you might see something like up here. Then if things, turn around and we start to break lower, that might be all she wrote. And then we come down. The initial support I was seeing is 95.73. And I just think we're in a big range. And bulls, they may be a little bit underwater right now, but they still haven't lost a whole lot by being a dollar bull. We have to, admit that. I'm not, but a dollar bull. But I'm saying is, they haven't been hurt much coming in and defending the dollar. So until we get past that, and we have the Brexit news ahead of us, so we're going to go with 97.06. May seem a little bit of a ways away, but okay. And you can see here we had 97.07 from Friday. $14 still remains key on a daily close. And here's a 96.33, and that's going to be support for right now. But like I said, things could change tomorrow. We might see a pretty big run up in the dollar if things get kind of crazy with the whole Brexit thing, and then you could maybe the following day or whatever could end up losing a great portion of this, and maybe that will finally kick off into some selling. As I mentioned, when you look on a weekly, losing that 96.89, getting below that on the close, doesn't send off alarm bells, but it certainly strikes a bit of a cautionary tone, probably basically a yellow light for dollar bulls. And certainly I think any rallies back up will provide some selling opportunities, but it might be a little bit scary in the meantime as we get through this whole Brexit news. So it's going to be 97.06. Watch that daily at 14. We know it'll take two consecutive 2-hour close above 97.31 to negate the shorts for any shorts being put on at 97.06, and support comes at 96.33. Now, moving on to gold, we had 12.58 as our kind of like our stretch area here for NFP, and we've come just about, well, we made a pretty good run towards that. But when the chat room on as we start to, things that started to move more higher up there, we talked about the 12.54, and actually made it up to the 12.54 going into the close on Friday. And you can see where I came up with that 12.54.30 here. When we look at it here on a daily, so the daily is set to test at 1260 with support at 1238. The 2-hour intermediate target of 1254 was attained on Friday at the close. Resistance comes in at 1258 with a stretch to 1267, confluencing with 1268, the 50% of the entire move of 1167 to 1369. Support comes in at 1245, and a 2-hour close below 1228 would nullify the upside. So a lot of stuff right there. So let's kind of break it down and go over this. So certainly looks like it's just making this run, which we just said, this 1260. Now, when we do a fib, there we go. You can see the 50% coming in 1268. And when you look at here on this 38%, we did see a pretty good pullback here. Pretty decent pullback, that 38%. Probably eventually this thing will probably want to come up here to the 1285-ish area here. You see here. And generally, if you see a pullback from a fib, like in this case, a 38%, pretty decent pullback, the next one's not going to stop it. It's probably going to want to end up going up in here toward eventually to the 1280s, upper 1280s, eventually. But in the meantime, there's some pretty good, pause area here, pretty good resistance at this 1273 and the 50%. So I'll probably use that as a excuse if we get up there and the market starts to lose a little bit of momentum. But certainly 1273 staring in the face. Well, we got some uncertainty. You know what? I don't know how this thing's going to play out. I'm bullish gold, but this whole Brexit thing and the whole slowdown, I think obviously with rates declining, if you think about it, gold should probably be a whole lot higher. If you think about it, I'm bullish gold, but if you think about the volatility we've seen in equities and then interest rates really coming, I mean, way down, way fast, we should be a whole lot higher. We should probably be around 1283 or something. So this is probably surprising it was not even a lot higher. And actually, this has just been creeping higher. It almost feels like it's been like people being forced out in some ways because you're not seeing this big old ramp up. It just kind of keeps moving a little bit higher. So it almost acts like gold's acting a little bit uncertain what to do with Brexit. It's kind of curious situation, but we're going to go with those technicals. So on the short-term base, we got to 1254. So we'll keep the 1258 for now. When we look at the 2-hour chart, you can see right here, this 58. Coming right across, might even be like 58 and change, but we'll call it 1258. Stay with that. And we have on the 2-hour chart, our support comes in at 45. It's 44.60. The daily, huge support here, 1237.5, which is we call it 1238. So you're going to go with 1245. But you could be careful. You can slip here because it's been just a grind moving higher. And we've come off a bit here from this 1256 after getting up there. We need to hurry it up. I'm almost out of time, and Dale's got to be up, so I really got to get clipping. Hang on one moment. See if we can hurry up and get through this. Boy, these bonds are something else. So it's going to be 143.22 and 143.1. Certainly bullish. And let's go and take a look at the bunds. Bunds have kind of eased back a bit finally. 62.96 here, and resistance 63.33. Keeping that right there. And let's quickly move to the DAX. Need to hurry up and jump out of here. Support's going to come in right there at 10,674. Resistance right there. If we can make that move higher, cut right there, 10,801. Obviously very bearish. Okay, and there we go, and I'll go on and get this posted out here into the room. And thanks for joining us on the European crossover.